Okay, Richard. So this is actually a very, very good opportunity, and this evening is smooth for us to learn something.
Yeah, very.
Yeah, very, very. Okay, so I'm going to take you step by step.
Okay.
Yeah. So I'm recording the session, and so you can mute your mic now. If you have any question, you
All
can
right.
raise
I'll
you
do
can
that.
raise your hand then take it.
Okay. All right.
Okay, so because I want us to have like a basic understanding of what Forex is once and for all, so that when you get this basic understanding, you are not going to search for anything else because this is it. There is nothing different from the basics that we're going to discuss. So first of all, you're going to ask yourself that what exactly is Forex trading? What exactly is Forex trading? But this whole Forex thing is just a short form of foreign exchange. The Forex is just a short form of foreign exchange. So this FOR here just indicates the foreign, and this EX here indicates the exchange. So it's just two names that they've just brought together to make the Forex. Okay. And it's a very, very good market. And we're just going to go into details of what it can actually do for us and how we can take advantage of it. So basically, my goal is just to make sure you understand the market, and you also do some few registrations and take some trades. It's going to be interactive, so at a point I'll just stop so that you ask some questions.
All right.
Okay, so when we talk about the Forex market, it is basically the foreign exchange market, which is currencies of other countries. Every country has a currency because that is what they use to, exchange goods and services. But before we get here, I want you to understand like two main things is actually missing in this industry. When you have markets can be grouped into two. Markets can be grouped into two. We have the goods market, which actually includes the service market, goods market, and we also have the financial market. You can write it. Markets can be grouped into two. We have the goods market and we have the financial market. I'm just going down to the basics so that you understand everything from the basic. We are mostly aware of the goods market because that's what we do. When you go and buy your phone, when you're going to buy clothes, when you're going to buy food at the market, all those interactions with the market is the goods market. Okay. And we are very much conversant with that market. But when we come to the financial markets, we have less knowledge about it. Okay. So the financial market is just the buying and the selling of financial instruments. Okay, financial instruments like bonds, like shares of a company. If you buy shares, you are actually engaging in the financial market. Okay, so this market is totally different from the goods market. And the reason why I'm starting with this is that going forward, I will make some critical examples and you see why a lot of people will lose inside this financial market because they think their thinking is in the goods market. They are thinking everything that they know is in the goods market. Meanwhile, they are actually trading in the financial market. So it is good that we create these two distinctions that when we come into the market, we have the goods market and we also have the financial market. Now, when you go into the financial market, there are a lot of breakdowns. We have the stock market. Then we have the currency market. The currency market is the same as the foreign exchange market. The currency market is the same, just the same as the foreign exchange market. And we also have the bond market. There are a lot of markets under the financial market. But for the purpose of our session, we're just going to focus on the Forex market, and we go deep into that. Okay. So you can ask questions because we've made these 2 points are very strong points. So I want to open the floor for some questions.
Okay. So I think currently we are on track, and I think I currently don't have any questions around this area because if you have a little knowledge to,
you can relate to.
I can relate to them. So
you can relate to that. It's very key. You jot it down because we're going to create a clear distinction between the goods market and the financial market, because it is the thinking of these two markets that makes a lot of people lose money in the financial market. So it's very, very important for me if you really understand. Okay.
Yeah, I'm making my notes as well. So
perfect. So now let's go deep into the foreign exchange market. So the foreign exchange market is the largest financial market in the world, the largest. So you can think of the stock market. You can think of New York Stock Exchange. You can think of the London Stock Exchange. You can think of any other stock exchange in the world and other financial market. The foreign exchange market is the largest of all markets, and it is the most liquid. It makes sense because it is directly money. Liquidity is money. And the foreign exchange in its form is already in money. So it is the most liquid market in the whole world. Okay. So these statistics you are seeing here, that it's the turnover per day is 7.5 trillion. Like the money that exchange hands per day in this market is about 7.5 trillion. Around this time, it goes past 7.5 trillion. It's over 8 trillion. But it is in seasons. So some seasons it could drop to 5. Sometimes it could go to 8 and all those stuff. But what it means is that there is a lot of money sitting in this market, a lot of liquidity, a lot of money sitting in this market where you and I can actually take advantage of and make some money for ourselves. So if you choose the foreign exchange market, you are not actually in the wrong market. You are actually in a strong market where we can make a lot of money. For currency, you've heard about the crypto market, right?
Yes, I know about the crypto market. Yeah.
Yes. So the crypto market is becoming like a subset of the currency market, because crypto is also currency. Yeah, but its volume is not even up to the foreign exchange market, because Forex is actually large. It's actually large. So that is one point you need to know about the foreign exchange market. And the second point is to know the people who are involved in this market, like the goods market. You can take a goods market like, let's say, Canadian market. Use Canadian market as the goods market. Definitely, if you enter into Canadian market, there are people who are inside the market. Those are the participants. So first of all, you see sellers, those who are selling their yams and all those kind of stuff. And you will definitely see buyers also coming in to also buy. You also see people who are renting their stores. Okay, so people who are renting their stores are also there. Then you see government officials who are taking their tax and those kind of stuff inside the market. All these people make up this goods market for it to become possible for people to trade. Now, when you come into the foreign exchange market, it's the same thing. There are participants. There are people who are inside this market. That is the second strong point. Because before you trade in any market, you need to know the people who are involved. The key participant is, the first one is the central bank. You need to take note of that, because when we are doing the fundamental analysis, we talk about how the central banks play a role in price movement. So central banks are like number one participant of the market. Then we have the commercial banks. Commercial banks are, we know them. If it's in Ghana, we talk about GCB, talk about stand charts, we talk about the remaining banks. Central bank is like Bank of Ghana, the Bank of England, all those stuffs are central banks. And we also talk about the government, because when government is actually a big participant of the foreign exchange market, especially when they are contracting their loans and all those stuff, Eurobond and all those loans that government contracts. All these stuffs constitute, or they actually add up to the market participation. Now we also have the fund managers, we have the ETF traders, we have the brokers. Now let me show you the things that are important. Central banks are important. The brokers are very important. And we have the institution and retail traders. Okay, because we are going into the line of speculation. So these are the 3 or 4 key participants: the central banks, government, brokers, institutions, and retail traders. Those are the key, participants of the foreign exchange market. Now, because we are in this market, we also know we should know where we stand. Mostly we stand at the retail level. Mostly we stand at the retail level where we want to speculate. We want to just kind of predict where the market is going to go, the prices and stuff. Okay. So we need to know the kind of traders we have in this market. Now we've moved beyond the central banks, the brokers and all those stuff, and we are sitting on the retail traders. We are sitting on retail traders, and we need to know what kind of traders are within the retail space. The first one is investors. The second one, we have the swing traders. We also have day traders and we have scalpers. Okay. The close differences are mostly about how long they hold on to the trade. That is like the key difference. So an investor can hold on to a trade for years. 5 years to 10 years, they can hold on to a trade. So those are investors. We have also swing traders. They can hold on to a trade for days and even weeks. Okay, so mostly the distinction between the type of traders is more about how long they stay in the trade. And we have day traders. They trade within, let's say, 24 hours. So between 1 hour to 24 hours, they are inside the trade. Those are day traders. And we also have scalpers. Scalpers are like just some few minutes, few seconds, and they are done. They take their trades, few minutes, few seconds, they come out of those trades. So when you just pull out retail traders, you can classify them in this way. And like I said, they are mostly about how long you actually hold on to the trade. Apart from that, everything is the same. Everything is the same. Now, the next point that we need to identify in this market is the currency pair. What is being traded? Because we're talking about the foreign exchange market, we need to know what is traded inside this market. And what is traded is mostly money. We trade money in the foreign exchange market. Okay. And this money, we are seeing that every country has their own currency. So if you take Ghana, Ghana has its own currency. Ghana is spending the cedi, the Ghana cedi. I don't know why we add Ghana to it, because we are the only ones spending cedi. Okay, so Ghana, we have Ghana cedi. And you can look at the US, they have the US dollar. You can look at the Britain. They also have the British pound. So every country has a currency. And now in the market, the things that we are trading are currencies. But we are seeing that these currencies cannot be traded alone. They need to be traded in pairs. I think when we move to the chart, you're going to understand this aspect that currencies are traded in pairs. Okay. Now, yeah, Richard.
Yeah, Steve, I'm here.
So you know the way we rank countries in the world, like this country is superpower, this country is that.
Yeah.
That's the same way currencies are also ranked. So we have major currencies. We have the major currencies, and we also have the minor currencies.
The minor. Okay.
Yes, and we have the exotic. I didn't add it, so you also have the exotic. You can write exotic. Okay. So what are the major currencies? You can even mention them because you know the space we are inside. If you want to give some examples, let's see.
All right. So the US dollar.
US dollar.
The euro, the pound.
The euro, the pound, GBP. Okay, you've mentioned three.
I mentioned three. So the yen.
Yeah, the Japanese yen.
Japanese yen. Okay. Let me see.
Australia too is big.
Australian dollar. Okay, yeah. Australian dollar as well.
Yeah, the Australian dollar. Okay. And there is another big one, which is the Swiss francs. That's
the Swiss francs. Okay, that's true. Yeah.
In Switzerland, we have the World Bank is in Switzerland, right?
Yeah.
Switzerland is like it's a very stable country. Switzerland is a very stable country. So we have the World Bank located at Switzerland.
Yeah.
So we have the Swiss francs, which is CHF.
Okay.
So I can number 1, 2, 3, 4, 5, 6. So the US dollar, the European currency, which is the euro, the British pound, and the Japanese yen. We have the Australian dollar, and we have the Swiss francs.
The Swiss francs. Okay.
And these majors, you understand why they are majors, because those are the financial centers. Europe is a financial center. The US is a financial center. Japan is a financial center. Australia is a financial center. Okay, so we are going to go into that bit. So now, we are still talking about the Forex market, and for us to trade in any market, we need to know when the market opens and when the market closes. It's very, very important. Market session is very, very important. We need to know at what time will the market open, at what time will the market close. Very, very critical. And I have this link here, which is Forex time zone. It actually shows you what is happening now. Let me see. Let me see it. So that you can open it. Let me look at that. It's called the Forex time zone. So I'm searching this. But I know all this, you are already aware of this information, right?
Yeah.
But it's it's important because
it's also important. Yeah.
I want us to go through this so that you don't have any doubt that there is something left.
That's true.
That's true. There should be no doubt that there is something left for you to know.
Okay.
Okay, I was trying to get it, but I think the website, they are saying the website is for sale.
Oh, okay.
You can search. I mean, you can see the link there. Forex time.
Yeah, I've seen the link.
Yeah. I want to send it to you with the correct. For the beginning, this tool will be very important to you, but after you master, it's not going to be like important again.
Okay.
Okay. So I've got it. I've got it correct. Okay, so you can check it. Are you able to open it?
Yeah, I've opened it.
Yeah. So when you open Forex time zone, you will see the table.
Okay.
You see a table. The first column they've written Forex Market Center.
Yeah, I've seen that.
Yeah, and you see time zone. You see openings at GMT, and we have closes, and we have the status.
GMT.
Yeah.
Okay.
So now let me run you through because you can also see. Now,
okay.
the first Forex Market Center is in Germany, which is Frankfurt.
The Frankfurt, yeah.
And you know, Germany is like superpower in Europe.
Yeah, yeah.
Because now Britain is no longer part of the EU. So Germany is like superpower in Europe. So the market starts from Germany, which opens at 6 o'clock a.m. In the morning. Then it closes at 2 p.m. You can see it there.
Yeah, I see that.
Yeah. So as it stands now, like the Germany session, Frankfurt session is closed. So that's why you see the status there as closed. Okay. Now the second Forex market center is the London. The London center. Okay. But is it London and Germany are actually in Europe in true sense? London and Germany, they are all in Europe. So together, Frankfurt and London together, you can even call it the European session. Because London opens 1 hour after Frankfurt.
Frankfurt, yeah.
And it closes 1 hour after Frankfurt closes. Yeah. So what we normally do is to merge Germany and London and call it European session. Or we give the center to London and we call that two sessions London session.
Okay.
Yeah, it's very, very important because it's going to feature in some of the things we're going to do. So the first market session, we call it the London session. We can say it starts from 7 o'clock a.m. and it closes at 3 p.m. And the 6 o'clock start of Frankfurt, you can call it pre-London session.
Okay.
Yeah, the pre-London session. That's it.
Pre-London.
Then from there, you come to the New York, which is the United States.
Okay.
It's also one of the biggest forex center in the world. Because you know the dollar is a global currency.
Yeah.
Yes, so it makes New York like one of the biggest financial centers. Okay, so we have New York. New York opens at 12 p.m. in the afternoon. And it closes at 8 p.m.
Okay.
So as we speak, the New York session has closed.
So I'm sure it ended about 27 minutes ago.
Perfect. Let me tell you, we'll get to some deep stuff. When we get to technical analysis, time is important. Price is important. You can write this down. You will go there. Time, price, volume, and momentum. We'll go there. I'm just mentioning it. Time, price, volume, and momentum. What we are discussing now is time. We are discussing about time. Yeah, very, very critical. So we have the New York session, which starts at 12 p.m. and it closes at 8 p.m. But you see something interesting. When New York opens at 12 p.m., at the same time, London section is active. Frankfurt section is also active.
Yeah.
Yeah, so New York session actually merges with London session from 12 o'clock p.m. to 3 o'clock p.m.
Okay. Yeah.
And within that short period, there is like heavy price movement. When we go to the chart, you see it's very, very important to actually distinguish this. It's called the London and the New York. London plus New York.
Okay.
Yeah, these two trading sessions merges together. Then we come to the Sydney session. Okay, so the Sydney is like the fourth market center, Forex market center. And Sydney is supposed to start at 9 p.m.
Yeah, 9 p.m.
Yes. So it looks as if from this one there is a gap. You see,
There's
when New York closed at 8, it takes 1 hour for Sydney to also open.
Open, yeah.
Yeah, but in actual sense, there is no break. Yes, in actual sense, there is no break. The Sydney actually opens right after the New York.
Oh, okay.
Yes, but when we enter into the chart, you will see the reason why 8 to 9 price, the spread increases.
Oh, okay.
Around that time, there is no volume. Nothing is going on within that short period, 8 to 9. So when I say time is important, it's really important because if you are trading 8 to 9 p.m., you are wasting your time.
Oh, okay.
Yeah, there's nothing going on there. What you actually see is bad market pricing, huge spread, huge slippage. We're going to talk about those things. Yeah, those are bad times. That is why even if you watch here, it doesn't look like the market is open. But really, the market is open. It opens really after the New York session. Okay, now let's go to the last one, which is the Tokyo session, which is the Japanese session. It also opens at 11 p.m. and it closes at 7 a.m. Okay, this is very important. So the Tokyo session gives way for the London session to start.
Okay.
Now, we actually need to add the Sydney session to the Tokyo session and call this two session the Asian session.
Okay.
Okay, so now let me simplify it. Now, when you come into the Forex market, there are now 3 sessions. We have the Asian session, the London session, and we have the New York session. That's the summary.
Okay.
The New York session. So when it is 8 and 9, Asian session has started. New York has closed. So we start with Asia. When it's 7 o'clock a.m., Asia will close and it will give way for London. Then we start London session.
Okay.
When it's 3 p.m., London will close. Already, New York has started at 12. Then it causes New York to also continue.
Okay.
Yeah, those are the 3 main market sessions. Very critical because when you start doing technical analysis, already come back to market sessions again.
Okay.
Right. So the safe thing that we want to look at in the foreign exchange market is the type of analysis we do. Do you know there are a lot of participants here, but speculators are more in this market? Speculators.
Yeah, that's true. That's true.
Speculators are more. And what are the speculators doing? They don't know anything for sure, but what speculators are doing is that they anticipate that price can go to the upside or price can go to the downside, so that they pick their trades. Okay. Now, as traders, we also need to analyze the market to determine the direction of the market. Okay. So we're going to go deep into that. It's left with about 10 minutes. Let me take my time and let's go deep into types of analysis. Okay. Now, let me see. So you realize that this slide is just like a note. Most of the thing you are going to write it.
Yeah, I'm doing that.
Yes. Okay. So when you come into this market, there are three types of analysis you do. Okay, there are three types of analysis in this market, in the financial market, because this analysis can be applied to any market. It can be applied to the stock market. It can be applied to the crypto market. It can be applied to the futures market. Any financial market, this analysis can be applied to it. Okay, so let me start with, which one should we start with?
I think we can start with the technical. Let's see.
Okay, now let's look at the technical. Okay, so we have the technical analysis. So if you see it anywhere, mostly they write TE. No, Forex, they like to use acronyms. You know, when they use acronyms, they make you confused. Then you begin to ask yourself, what is this? What's the full meaning of this?
That's true.
I'm telling you, those things, I don't fancy them at all. I feel like things are being made like complex for people. It's the right T. T is technical analysis. Okay. So now technical analysis is just a form of analysis where the trader looks at the past. He looks at the past, studies the past, and uses it to make a decision in the future. So you are going to analyze what happened in the past. Based on what happened in the past, you develop certain patterns. This is what you will see. Anytime A does something, B happens. So you go into the past and you say, anytime A does something, B happens. Anytime A does something, B happens. Or you can say, anytime A does something, B is likely to happen. So you go to the past and you make those analysis. Then you come into the future. Anytime you see A, now you predict that B will happen. Let me give you like example in, let's say, in the real world. Maybe you have a friend and the person asks you to, lend him some money. So he asks for, let's say, he asks for 1,000 cedis. So when the person requested for 1,000 cedis, the person didn't pay. The person said you pay in 2 weeks, but the person didn't pay in 2 weeks. Now, the same person came to ask you another time that please give me 1,000 cedis. Maybe this time you decided to forgo and you give him the 1,000. In the next 2 weeks, the person didn't pay. Now, when the person is come to ask you money again in the future, you will now develop a pattern for the person that this person, anytime he asks me for money, he never pays.
Doesn't pay.
Yes. Maybe you don't know. It could be possible that in the future he will change, but you don't care about the future, whether he's going to change or not. You are studying his pattern, his behavior in the past. Then you are going to use that behavior to make informed decision in the future.
In the future.
That is simply technical analysis, and everything is done on the chart. Everything, all the analysis is done on the chart, which like we're going to go into that like strongly. Everything is done on the chart. So if you bring it to the chart, there are multiple examples that I can give back. Because I've not opened my charts, I'm going to leave this as like still the introduction.
Okay.
Yeah, so but that is the main idea. You watch the past, see what happened in the past, and use the same pattern, bring it into the future. Anytime you see something similar like that, you also project that this will happen.
This is likely to happen. Okay.
Yes, likely to. It's good to use that word likely. Yeah, you understand. The word you use likely is very important in trading. This is what is going to happen, like likely. Okay. Now, so basically that's technical. It's nothing strange. It's nothing strange.
Okay.
Okay, now let's look at fundamental analysis. FA. Fundamental analysis is looking at if it's a country, because currency is about countries.
Okay.
So you are going to look at the country's economic data or economic indicators
Okay.
and use it to project the future performance of that currency. So now let's look at some key indicators. Key indicators like GDP, gross domestic,
Okay.
GDP, CPI is interest, CPI is consumer price index, inflation.
Yeah.
Yeah, we also have producer price index. We have depreciation of the currency and all those stuff. Those are all economic indicators. Now, when you assess the country and you see that the country's economic indicators are good, you can now make projection that in the future, this country will perform better compared to another country. Okay, now, so when we sit down, we compare Ghana to US, and we compare the economic data, and it shows that US economic data is better than Ghana. You can now project that even in the next 3 years, US currency will perform better than the Ghanaian currency. So, like, these stuffs are not deep things, okay? But when we go to the practice, then you see how it actually works. Okay, so just using economic indicators, I'll show you where we are going to find these economic indicators. Okay, so now the last one is sentimental analysis. That one is just by emotion. You just decide that today I feel good, I want to buy. I feel good, I want to sell. Or I feel like I want to buy. Those are all sentiments.
Okay.
They are not based on any logical calculation, nothing. Just your emotion.
Okay.
Maybe you look at the chart, you feel like the way the chart is going, you want to take this trade, you want to take that trade. That is like the sentimental analysis, and it's not good. That way of analysis is not good. The good way of analysis is technical and fundamental, and the mixture of it, like the hybrid.
Okay.
Hybrid. So you cannot say I want to just do technical. You can also say I just want to do fundamental. You just need to blend it in a way, and we will now look into that how we can do this combination, right?
Okay.
So
Okay.
I can see it's left with 1 minute. I'm going to end it. Then we join again. Then we start. Yes.
Okay. Yeah.